Hi Jay, thank you for taking the time to meet up with me. I would love you to explain to my potential buyers, and I meet a lot of people who do not live in Hawaii, but they intend to purchase either second home or investment property in Hawaii. They're not really sure yet how they're gonna play cards, but can you talk to these people and tell them what they need to know?
Absolutely, and thank you, Elena. So there are three main types of loans. There's primary residence loans for those who are going to occupy the property as their primary residence, which would not be the case unless your client was planning to move to Hawaii full time. The second option is for somebody to buy as a second home or a vacation home. Even if they don't own their primary residence on the mainland, they can still buy a property in Hawaii as a second home, because that is just a type of financing is called. And the third option is for somebody to buy it as an investor if they intend to rent out the property year-round and not use it as a vacation home.
So what sometimes people tell me is, oh, I'm only gonna rent it for a year and then I will move in.
They still would have to buy the property as a investment property, because in order to qualify as a primary residence, you have to occupy the property within 60 days of closing.
60 days of closing.
And your income for qualification purposes for the primary residence would have to come from locally, unless you can demonstrate your income for qualifying would have to be local in Hawaii to buy here as a primary residence, or you'd have to be able to demonstrate that your income can be earned from here, even if it's from somewhere else. You can work remotely, basically, for your job.
And if people not making any income in Hawaii, then it's already the whole idea they should qualify either second home or as an investor.
So if you live and work in California and all of your income is working for Google in California and you can't work remotely in Hawaii, then you have to buy it as either as a second home or as an investor.
Okay, great. That's good to know.
Okay, so the qualifications for buying as a second home, some of the general qualifications are that they have to come in with at least 10% down. So if you do less than 20% down as a second home, you are going to have to pay mortgage insurance or PMI, private mortgage insurance. You can also elect to have lender-paid mortgage insurance, but your interest rate would be a little bit higher to compensate for that. But the minimum down payment is 10%. The good thing about buying as a vacation home is that the interest rates are comparable to buying as a primary residence, so they're about the same. The thing that makes it difficult for a lot of people when buying as a second home is that they have to qualify for both payments: the payment on the new property that they intend to purchase and their existing mortgage or housing payment wherever they're currently living and working. So they have to qualify for both housing payments at the same time to purchase as a second home. The other requirement is that for as long as they own the property as a second home, they have to use the property as a residence or have it available for their use or their family's use at least 10% of the time that it's rented out. So if the property is going to be rented out for 300 days of the year, then they have to be able to use it as their residence for vacation purposes or their family's vacation purposes for 30 days of the year. So they cannot rent the property out full-time 12 months out of the year as a second home.
In Colina, in that case, it's kind of perfect for that. I mean, areas like Colina.
Areas like Colina are great for that because some parts of Colina are considered resort areas where they can actually do short-term rentals during the course of the year, go out there, spend a couple of weeks on vacation 2 or 3 times a year, or have it available for their personal use. They don't necessarily have to occupy it for 30 days out of the year. It just cannot be rented out 12 months out of the year.
I see. So it has to be rented out less than 12 months.
Yes. They have to. It's an IRS regulation. So when you're filing your taxes, you're going to put in there how many days you had the property rented out and how many days of personal use did you have. It's a tax code differentiation between investor and second home.
Investor and second home. And also I heard that when people qualify, they reserve. That was about beach villa, because when you buy like an investment property, then reserve is much higher than you need to have reserve.
When you buy as a second home, a lot of the other qualifications for it are like buying as a primary residence, where you don't necessarily need a lot of cash in reserve. You have enough cash for the down payment and the closing costs. You don't need much in reserves, maybe 2 months at the most.
2 months.
Like for us, we don't require any reserves for second homes, but some lenders do require reserves for second homes. But as an investor, you're going to need 6 months of reserves.
Right. So what else? Like,
and by reserves, I mean 6 months of the housing payment. So if the housing payment is $3,000 a month, you'll need $18,000 in reserve, and that can come from checking, savings, liquid accounts, investment accounts, IRA, 401k, retirement accounts.
Retirement account. So what else? Like, tell about your own guys' program, in-house program for this second home buyer. How else is good for them?
I mean, the rates right now, November 2019, we can get below 4% for second home buyers. You get 3.75% right now. For a second home loan.
If they qualify for the second home. In other words, they need to...
They need to qualify for both payments.
For both payments.
Their existing payment where they currently live, plus the new
What
payment.
if they, where they live, they only pay rent? So you would
whatever
calculate...
the rent is.
Whatever the rent, they need to qualify their rent. Like, say, New York, they pay rent.
Right.
And then now they need to qualify for that payment and still have enough money left for...
And they cannot use any of the rental income that they expect to receive from the second home to help qualify.
Right.
So in that case...
So you run what debit to income ratio in that case? Like 51%?
50. 50% maximum debt to income ratio.
Talk about, a little bit about this debt to income ratio.
So
People
for example,
don't understand that either.
If they earn $10,000 a month, gross income before taxes, they're both salaried, they each earn $5,000 a month, it's a married couple, and they own a current residence on the mainland and they're paying $2,000 a month for their current residence. So 50% of $10,000 is $5,000. So we subtract their current housing payment of $2,000 from that $5,000. Which means they have $3,000 left for the rest of their debt and the new housing payment. Let's say that they have $500 a month for credit cards and a small auto loan. So we subtract the $500 from that $3,000, and they're left with $2,500 for the maximum housing payment for their new second home purchase. That includes principal, interest, taxes, insurance, and maintenance fees. It has to be all in that $2,500 per month.
That's very helpful to know. Thank you.
You're welcome.
That answers a lot. Thanks.